Hey everybody, got a question yesterday in the QOD post, or was it, yeah, yesterday, day before, whatever it was, from Martha Ruiz, uh, talking about possibly following, with the moves of TSP Guide. I'm going to talk about the pros and cons of following anybody, whether it be myself, Deb, TSP Guide, or anybody else who's experienced, or some kind of analyst, or has some kind of knowledge that you don't have. Like I said, there are pros and cons to everybody. I'm not going to put down anybody, and uh, what I want to point out here is, because she said that she wanted to follow TSP Guide's strategy, and just whenever he moves, she'll move. But there's some devils in the details that you might want to pay attention to that could make a difference on your decision there. Maybe it is the right person you want to follow. Maybe you might decide after watching this that you might want to be a little bit more pragmatic, or decide ultimately, yeah, this guy might not be the one. Whatever the case, it's all about education here. Okay, so that's why my goal is here to help you guys understand more, learn more about the numbers that you always hate, but you really need to learn. And I do have a lesson in the guide section of the main group on Facebook that covers some of this. So you get more in depth on that as well. I'm going to try to keep this as somewhat quick and to the point as I can, so it's not too run on, draining, whatever, boring for you guys. So all right, so I'm going to put on some details here. Okay, so here's the full IFT history I have on the guy who runs my TSP Guide. Deb provided the link to his profile on TSP Talk, and I got his IFT history from basically from late 2016 to the end of 2030. Or actually, his most recent move was the S Fund last September, or actually October 6th, is what it appears to be. Anyway, look here. Basically, he did an IFT to 100% S Fund back before December 30, but I can't work with year to date or end of year, numbers without having this information to look at. To have basically reset the baseline right at the end of the calendar year. So I'm going to start it out with December 30, 2016, where he was already in 100% S Fund. Okay, so at that particular time, S Fund's price was $40.99, whatever. $10,000 starting balance would just, this is an imaginary balance, by the way. That would have gotten him 243.926 shares of S Fund. Okay, basically go through all these different IFTs, interfund transfers. So these guys who might be newer here, and you see he had mostly jump back and forth between the different stock funds at times, but did periodically jump to. He went to G Fund in October of 2018, and then back to stocks on the very next day, and then back over to G Fund on November 20, 2018. This looks like it might be an IFT, but that's not an IFT. That's just the end of the calendar year. I needed to use that to figure out what his performance in that particular year was. Okay, then he IFT'd in January of 19 to back to S Fund. Then he started jumping back and forth between F and C, FC, FC over the course of 2019. Ended 2019 100% in C Fund. And in 2020 was back and forth again between G and C, and then over to S, and then over to G, and then to S again, where he's at now. Okay, so what does all this activity actually translate to in terms of how good has his account done relative to the TSP funds themselves? All right, so if you look over here, basically I did all the math here. Basically, just ran a bunch of formulas. If you guys really want to get into this kind of stuff, which I do highly encourage, because it's important for you to know. If you're going to follow somebody, you want to really know how their account really is doing, and if they're really going to do you any good. or if you're better off just staying 100% in CNS funds or something. Yeah, you'll notice a difference. Okay, so looking over here though, how the end of year performance for his own, as well as CS and I. We don't have to worry about G and F funds. There's no way that those two funds are going to even come remotely close to what any of these have done. So no point in looking at them. All right, but anyway, if you started out at the end of year 2016 with a $10,000 balance, without any additional contributions to his account, you would have ended 2020 with 19,324. That's not bad, not bad at all, actually. 4 years of gains, and almost and not too far away from doubling his original balance. So it didn't take that much, but again, the devil's are in the details. What did the other funds themselves do at this over the same time, and what did he do relative to each particular year? Okay, now get to the real point of this. Out of this 4-year calculation period, he is actually outperforming all of the stock funds. Yeah, so he's got a 17.90%. This is a compound average growth rate. If you guys not sure what CAGR is, that's an abbreviation for, like I said, compound average growth rate or compound annual growth rate. That's what you really want to know as far as your own account's performance is concerned. What's going to get you the best returns long term? Now, from year to year, you're going to see different details in here, and I'm going to explain to you how his account ended up, what you see here, actually outperforming all of the other funds. Okay, so out of that 4-year period, the C fund has done right at 16% average per year. This is compound. You can't just take the numbers and add them up, and I'll show you how that works. So if I take his 19.29 there, and actually I'm gonna have to subtract 1 on that one. Okay, so minus 5.21, and then you get 14.48 there, and then 49.29. Now also, if you see on the TSP Talk website, I believe his account, or no, I think on his own website, TSP, my TSP guide, or I don't remember the website name, but it's my TSP guide. If you look for that, his number was actually 47 something, if I remember correctly, 47.28 or something along that line. But now that factors in the fact that he's added contributions to the account as well. Among other things, there might be other little details in there with the way it's calculated, or the way his PIP. His PIP's a really complicated calculation that I don't even waste my time trying to figure out. I just try to get in the right ballpark, and then we'll use the same standard for both my account versus the other funds, and that's all that matters. It's easier for me to do with my own account because I don't contribute money anymore to my account. So what my PIP shows is actually what my own calculations also show. But for those of you guys who contribute still, it's a more convoluted calculation. It's not even worth trying to figure out. Just get in the right ballpark. Anyway, if you see here, if I add these up, I come down. Okay, I'll just sum them because I was hoping it would show up at the bottom. Or actually, no, we'll do average. Because this is how most people do it, and this is what you call a simple interest. It is not compound interest. So as you see here, the simple interest rate was 19.46%. So when you do the numbers just raw like that, it'll look like you performed even better than you really did do. 19.46% versus 1790 compound rate. That sounds like a better number. It'll make you feel more good about yourself, or have a better ego, whatever you want to call it. So, but it doesn't work that way with compound growth. Because I can do the same thing with the CS and I funds, and they're going to come out with probably higher numbers as well. Now, if you notice also, I have these numbers in terms of decimal and not in percent. There's a reason for that. It's because to calculate compound interest, it's easiest to do when you have it in decimal format like this. Because I'll come down here and then you can see how my formula is here. Basically, a power, product, and then all these four cell references, and then 1 over 4. And I'll explain that for you. So basically what you're doing is multiply these four by each other first, and then whatever that comes out to, you got to raise that result to the power of 1 over however many periods you're working with here. So there are 4 periods, so it'll be power of 1 over 4. You can use a scientific calculator. Don't try to use a regular calculator. It's be a lot harder to do. But that's how you calculate compounding interest. All right, so 1790, it is an outperformance. Like I say, his C fund did 16% over that same 4-year period. S fund was 15.99%, virtually in lockstep with C fund over that 4 years. And I fund was at 9.51%. So it looks like he's outperforming these funds. But like I said, the devil's in the details here. All right, so if you look here, actually I should have put why not? All right, how about we conditional format these so you can see just how who did what compared to what. So 2017, end of 2017, iFund was actually the top performer. And even if you were just straight up C fund and S fund, C fund did 21.82% and S fund did 18.22%. So, our Deb's current 20C 80S strategy would have gotten you not as good performance as you could have gotten from 100% C fund. However, at the same time, she also wasn't in that distribution back at that point in time. Deb would have to give you the details on that, or I'd have to go through the group to see what her IFT history was, because I created the group in 2014 and she came to the group in 2015, and I can't remember how long it's been since people started following her and she started regularly announcing her IFT and contribution allocation setting change activity. But again, these are pros and cons. There's no full perfect strategy that's going to guarantee you the best results. Now there are going to be times where you find that Deb strategy is not going to do as well as something else, or you might find that what I'm doing isn't working so well at one point in time, and ultimately that's where the compound average growth rate or compound annual growth rate, whichever, the true average over a long period of time is what matters to you, because that's what's going to make the biggest difference to how many dollars are in your account over a 10, 20, 30, or even longer time period. Okay, we'll add in some more conditional formats here, color scales. All right, so end of 2018, he was right up there, almost at the same level as C Fund, not quite there. C Fund lost about 4.46 or so percent, almost 4.45%, whereas he lost 5.21. S Fund was down almost just about 10%. So you got to subtract 1 for that. All right. And that doesn't mean that there's anything necessarily wrong with what he did. If you're just among the leaders, where it's kind of leader by committee, if you will, from year to year, then you just have to be up near the top. You don't have to be a top performer relative to the stock funds themselves to outperform all of them over a long term. Okay, coming back over here though, end of 2019, as you see here, he only had a 14.48% return, while C Fund had a 31.45 and S Fund had a 27.97. So at face value, it looks like he did horribly in 2019 compared to what he could have done. Even just just sitting buy and hold C fund or S fund would have gotten him better results in 2019. Okay, now this year though, or 2020, was a different story. And this is where all the difference is made in terms of why his account's performing better than the other funds. So he had a 49.29% return this last year, and then 18.30 for C fund and 31.85 for S fund, and only 8.168% for I fund. All right, so 2020 he did very well. Now let's see what the 3-year pager did to see if we negate the effects of the most recent activity. Because maybe that was a fluke, or maybe he's onto something good. Now here's the downfall of swing trading, or moving your money back and forth between stock and bond funds based on chart technical data. Sometimes it's going to work out great for you. Sometimes it's not going to work out great for you. But we can figure this out. So I'm going to do power product, and then that. How about that and that? Parenthesis, and then I'm going to go raise it to the power of 1 over 3 because there's only 3 calculation periods. I'm going to hit parenthesis, enter, and then, or tab, whatever, and then there we go. Okay, so he had a 8.98% return over the 3-year period prior to 2020. Now let's move over and see what each of the other funds did. So as you see here, C fund was up 15.25%. That's over that same 3-year period. S fund was up 11.14%, and even I fund was outperforming him, 9.97%. Okay, so long story short, I can crunch the numbers and look at my own figures. I can pull up Deb's history or anybody else's. You might be on Grow My Thrift Savings Plan, Jerry's site. Get his information or whatever. It doesn't matter who you're following. You're going to find that sometimes that somebody's going to make bad moves, and sometimes somebody's going to make really, really good moves. Just a matter of what are they doing long term, and then what's more so how are they doing compared to the CS and I funds, and then also what strategy just fits better for you. Sometimes having the best performance possible isn't always the name of the game. The best you can get is great, but if you want to have fun doing this also, like this is what a lot of especially the chart technicians do. They kind of make a fun out of it and look at the charts and then just let the charts tell them when they should make a move or hold or whatever, and then in which direction. Okay, now my strategy, I'm a little bit different there. I go more so on earnings fundamentals. I do swing trade myself to some extent, but I don't base them on chart technical data like your typical swing trader will. And then Deb is a long-term buy and hold strategist, always stays in CNS funds. She was actually 80% stocks and 20% bonds, I remember, when she first joined our group. And then pretty quickly after that, she went to 100% stocks and has been there ever since, and just periodically moves based on all the different things that she picks up from whatever resources. Doesn't matter if it's from something I did or other available resources out there on the web or news or whatever. But now, the less you move your money and the more you just stay 100% in the CNS funds, the less chance there is that you're going to make mistakes. If you just stay 100% C or S funds or any combination of those, you're always going to be somewhere within, or more likely somewhere in that ballpark of in between what CNS funds are doing. So if if one is doing 18% and one's doing 20% and you're half and half, then you're going to end up with a 19% return. All right, so swing trading, whether you're doing kind of like what I'm starting to do more now, which is just jumping back and forth between CNS funds, or if you're going to bounce between stock funds and bond funds and back to stocks or whatnot, and especially if you're using chart technical data to indicate when to do that. you're going to make some mistakes. There's just no way around it. I make mistakes myself, so I'm not going to exalt myself and say that, yeah, you should be following me. No, my strategy is not always ideal for everybody's needs. And I do make my share of mistakes. And there was a point in time where, even over more than 5 year period, I was outperforming all the stock funds. But then, a couple mistakes here and there have really cost me. I'm going to be the first to admit that. So you got to watch out for that stuff. You're going to make mistakes. The question is, can you learn from those mistakes? What did you do that caused you to have a problem before? All right, so you got to know what those are and try to figure them out. If you need help trying to figure out what mistakes you made, please let us know. And we need to know your actual IFT history, though, to be able to help you any. We don't need to know any share prices or share quantities or account balance information at all. We just need to know exactly what day you moved you did an IFT, and then what you did it to. We got to go. We have to be able to backtrack. Just like I just showed you here, I backtracked to 2016 with my TSP guide information. We can't work with we can't help you out too much if we don't have all that historic data or those past transactions. If you don't have that information, you can always go on your quarterly or annual statements. It should show some information there. Or if you log into your TSP account online, there will also be recent transactions section over there. That'll give you some it only shows for about a quarter there. But it at least gets you off to a start. More so the more recent stuff over the last year. That's what your PIP is determined by. Also, is your IFT activity over the last year. Or where you were, even if you didn't have IFT activity, where was your money distributed a year ago, and then what moves have you made with it between a year ago and now? That's ultimately what determines your PIP, or personal investment performance. All right, so that's all I have on this. It doesn't. I just want you guys to be aware there are pros and cons to every strategy, and then everybody's going to have varying results from year to year. There's going to be times where I might outperform long term. That's what it matters, is how am I doing long term, or how is this person doing long term, or how is that person doing long term? Who's getting you the best results, and who just matches up best with your own personal needs as well. Because like I say, it could be me, it could be my TSP guide, it could be Deb, it could be Grow My Thrift Savings Plan, or someone else you see on TSP Talk, or whatever other websites there are out there. Okay, so that's all I have. If you have any questions, comments, whatever inputs, please add it in there, and don't hesitate. Keep watching for more Q&A kind of stuff here on my YouTube channel as well. All right, thanks a lot, and we'll see you guys later.